going to give me permission to post to my own YouTube channel. It's saying it's getting it set up. And then, like I said, if you have any questions, I have a couple of things that have come up. There we go. Okay, I think that's got it. Okay, we'll see if that works. So to say, freshers in Canada with construction background, preparing to invest in the future. I have some basic knowledge of finance, real estate. I want to know more about taxes and mortgages. Well, there we go. Maria.
Sure.
Mortgages. So, what's going on? What's going on with the Bank of? I saw a note about the Bank of Canada. What's the Bank of Canada doing today or this week, or what's going on?
Canada is preparing to make an announcement on Wednesday, and there's a lot of predictions, pros and cons, up or down. But so they're predicting that they will increase the interest rate, or the Bank of Canada rate, 5.25. But again, this is speculation. So that what that could do is, if the client is in a variable rate mortgage, which means it's dependent on the prime lending rate, it would potentially increase by 0.25 as well. If you're in a fixed mortgage rate, then it would not affect your existing mortgage rate, but it could affect any new mortgage rates that are being issued by the lenders. So that's the speculation that's going on. The Bank of Canada will know Wednesday. There's a lot of talk that they probably will not do something until the March announcement, but then there's a lot of talk, and you can probably relate more to this, things like the inflation part of it. We need an economist to really finish this conversation, but the economist will be able to talk about the inflation rates, and would increase in the rates really help with the inflation. With regards to, so you're new to Canada. I don't know how long you've been in Canada, and you're working in the construction background. Are you self-employed? Are you a salaried or an hourly employee? Those are some of the key things that you need to be aware of or be attentive to if you're looking to buy real estate in the future. Whether, for example, if you're looking to buy as your principal residence, as a new to Canada, there are some special rules that are in your favor. So you should definitely consult, even in the planning stages, you should consult a mortgage agent who focuses on new to Canada and first time home buying, to see what all of the benefits are, so that you can prepare yourself for that situation.
Okay, and with that, since we have Maria here today, sure Maria can include her contact information in the chat. So if you want to reach out to Maria to ask some questions, I've also put in the chat today my calendar link, that if you're here today and you want to book, have some questions and you want to ask me some more personal or one-on-one time, you can book that. It's some crazy stuff going on today, Maria. It's I don't know if you look at the markets, but it's very red, and I'm not licensed to give stock tips. I am a licensed advisor to advise my clients. It may be a good day to buy. It's not a good day to sell. Don't be rushing. Don't be calling your stock. Don't be jumping into Wealthsimple or so, whatever platform. Let's just say the Dow's down by, let's take a quick look. The Dow's down almost 2.75%. And the TSX is down 3% today. But I always say, if it was good, if it was a stock that you liked or investment you liked yesterday, means it's on sale today. It's just not so great if people needed if you were looking to take some money out of the markets for buying real estate, probably today's not the day to be withdrawing from the markets.
That's also
it's bound to happen though, right? The markets go up and down. It's bound to happen with both the talk of and this is how interest rates and other things can impact the greater picture, that the interest rates and the things that's going on in the US, and also interest rates and things that are going on in Canada. Profit taking time, I guess.
Well, in general, January is profit taking time. So it does, January is in general, is a month the results fluctuate significantly. A lot of buying and selling and that kind of stuff. So paying out dividends and what have you. So January is a bit of a fluctuation month. So in general, but you touched a really good point. I don't know, Manmeet, if you have money from where you're originally from, or if you're saving money here, but 2 points. One is, if you have money here and you have them in, let's say, stock market or some kind of financial, the word is escaping me, but if you have it in some kind of financial avenue that could fluctuate, if you're looking to purchase or you're looking to create your down payment, you should probably take that, whatever time it is. Let's say today you like the number, go in and redeem it, put it into a regular daily savings account so you know exactly what you have, so that you're not, dealing with the fluctuations of the market. So that's definitely 1 point. 2, if you have money from a different country, from where you're from originally or where you previously lived, you should be bringing it over to Canada so that it has time for them to validate. The banks have a lot of rules now with regards to money from foreign countries. So they want to make sure that it clears all of the bank rules. So it needs to probably sit in your account in Canada for a minimum of 30 days for them to confirm everything. So you can't leave yourself, you can't make things too tight. If you're looking to buy or thinking about it and you have money there, bring it over, because it can take sometimes up to 30 days to get here and for them to be able to deposit into your account. And then that lender who's ever financing may want to see the history of how those funds came about. So you're going to have to produce bank statements from the previous where you had the money sitting before.
Yeah.
So
No, it's all, yeah, that's 100%. And you also just be aware that, like, in some countries, it's harder to get the money out of. I know I have a colleagues that had money in our had owned property and money in Iran, and sometimes you're paying a withholding fee to get money out. Similar, it can be challenged. I have a couple at least one client that's originally from South Africa. So again, getting money out of South Africa to come into Canada. The other thing is also just, here's a quick tax tip, that if anyone owns, if you own foreign property, there is the disclosure that if you own foreign property over the amount of $100,000, that you have to disclose that to Revenue Canada. Not necessarily if it's, and there's some rules around whether it's just personal use property or if it's a rental property or doing other things. But that's also an annual reporting has to be done on your Canadian tax return for any property over 100,000 that's owned outside of the country. And then I will just kind of poke it out there. I'm not going to touch on it today, but that was some discussions around, does cryptocurrency, do those rules apply to cryptocurrency? Because in most cases, people are holding their cryptocurrency outside of Canada. And if that value if it is outside of Canada and it's greater than 100,000, then yes, you should be disclosing it for them.
Oh, so is cryptocurrency, I guess it's considered a foreign asset.
Foreign equity. Yeah.
You have a property when they talk about that, but
yeah, but same as if you own foreign U.S. stocks. So again, depending on where you're holding your U.S. equities, if you're holding in like a U.S. organ, but most are going through like a Canadian brokerage. But also if you're owning same with vacation properties or other things outside of Canada in the U.S. would also be to report that. All right. So just a couple of things, just public information. I know I should be asking my advisor, do capital gains on my investments have to be claimed on my taxes? Yes, they do, Jonathan. They do have to, and usually what happens is your depending on where you hold your investments, if it's with one of the banks will issue either they issue T3s. So T3s are like interest and dividend, and they'll also issue T5s. So even if you're using like Questrade or Wealthsimple or any of the banks or the insurance institutions, if it's sitting outside, now if it's sitting inside your RSP, no need to worry, doesn't count. If it's sitting in your tax-free savings account, no worries. Nothing to worry about in your tax-free savings account. But if it's sitting in an open, like an open trading account, then you'll be getting a T3 or a T5 issued. I have some clients that are doing like option trading, and then not as a day trading, but like open investing, in which case you'll get a separate T5. It's always fun. You'll actually get a separate T5 for each trade. So that's always good to kind of warn your tax preparer that maybe you don't want to load every T5 into the tax software. You can actually go and just run it off the statement. So if you're using, again, Wealthsimple or Questrade, you can run a statement balance. I had a couple clients that had almost 70 to 80 trades. So then you start importing 70 or 80 T5s that don't necessarily have the adjusted cost base in them. It's a lot of extra work where you can just go off the statement. So yeah, so it is, and only when you sell. Yep. So just when you're selling, that triggers the proceeds from distribution, and that will create and you just get them once a year. So usually right around the end of February, beginning of March, sometimes almost mid-March last year before some of the banks issued their T5s and T3s. But you'll get those. The nice thing is that when you work with a tax preparer like myself, is that I am able to log into a CRA account for you under represent a client, and I can actually just download all of the statements directly from the site. So clients don't actually have to give me T3s and T5s and T4s, and I'm able to download it right from the CRA site. So that's cool. All right. Also, just a couple of touch points today is that tax-free savings accounts. So tax-free savings accounts are different than RSP accounts. So tax-free savings accounts work on the calendar year. They run from January to December. So December's gone, but a new amount, so a new $6,000 limit has been added to your, as long as you're a Canadian resident. So that's good to know for people that if you move outside of Canada, or if you're new to Canada, it's based on your tax filing year. So Mamie, so depending if you haven't filed a tax return yet, so when you file your first tax return in Canada, that first year will trigger an annual limit, not based on income. It's a fixed amount. It will trigger a $6,000 per year tax-free savings account contribution room, and then that's cumulative. It grows each year that whether you use it or not. The nice thing is, as well, as if you withdraw, so if you actually took money out of your tax-free savings account in December, the new calendar year resets and you get that money back added for your tax-free savings account. So it's a little bit late, but think about that for next year, that if you need to take some money out, take it out in November or December, and then you'll get that contribution room back in January. Just taking a quick look here just to see.
Just to clarify, so if I have a client, for example, and they want to use some of their money from their TFSA for their down payment, more than their annual limit, obviously. So let's say they're going to withdraw 50,000 from their TFSA. Let's say they use December as an example. So in January, I know that they can't replenish it in that year, but in January, that whole amount will be available as a carry forward balance that they'll be able to replenish.
Yep, that's correct. And so it's super important to know the amount withdrawn versus what, but it's good to also check the limits, right? Because again, there's been cases where losses don't really count in your tax-free savings account. So for example, if you had, so here's a good example for a tax-free savings account. So if I put in $10,000 into my tax-free savings account and it goes down to 5,000 and I take that $5,000 out, I'm taking $5,000 out. I'm not taking 10, even though the book value was 10, the market value is 5. So the next year I would have only $5,000 of room added because it's what I physically took out of the account, not what the potential book value was. So investment losses don't really so a loss is a loss. So if you put in 20 and then you take it out, it's only worth 10. You don't get 20,000. You don't get 20 of new contribution room. You only get the 10. So it's really about what's the cash value that you've taken out of the tax-free savings account, not the market value, not the book value. Yeah.
Make in a sense, and the opposite. If there was obviously you've made money. So let's say that 10,000 you invested in TFSA now is 20,000, and you took out that 20. You're able to replenish that 20 in the new year.
I believe that's correct. Yep. Okay. Yeah. So it's important to, again, when you get your notice of assessment. So again, when you file your tax return, you get your notice of assessment, and then on your notice of assessment are important things like your RSP contribution for the upcoming year, what your balance is for your tax-free savings account. If you have a home, if you're a first-time home buyers or a lifetime learner, if you took money out of either of your RSPs for either of those programs, it'll have what your balance due is on your notice of assessment. There's a couple of new things new last year, which was the education credit. So there's a $250 annual accumulating amount. So if you've take a course, has to be like a registered, different than the self-employment side, but if you take a registered course at a college or institution, you get 100% tax credit on the first $250 versus just the 16% tax credit. So that's always good to know. There's Jonathan might be good, or Maria, the digital subscription credit still there. It's $100 per year. So if you're paying for a subscription to the Globe and Mail or the Toronto Star or other kind of news media subscriptions, those are tax deductible even if you're a T4 employee. Good to know. This year, the working from home tax credit. So again, if you're on a T4, the working from home tax credit is increasing from $400 to $500. It's just 2021. We have a full 12-year calendar where where people were potentially working from home. And in 2021, 2020, it was only the March to December. So it was $400, but because it was March to December, 2021, it was a full year, January to December. If you were working from home the full year, then it's $500, or you can actually do the detailed calculation method. So those are some things that are new and exciting for, I don't know about exciting, but new. And then does the tax credit apply to those who are self-employed? Not apply to those self-employed, because self-employed people, so it's generally what you're going to do as a self-employed is you're going to claim the home office expense. So the home office calculation is nicer because it's based on actuals and not just, can be 100% tax deduction versus the 16% tax credit. So on the working from home tax credit, it's $500, but then multiplied by your 16% tax credit, where working from home as self-employed, it's tax deduction So full amount deducted and then calculate tax afterwards. So yeah, it's good to know. Also new this year, told it a bunch of times, I'll repeat it again, is the staycation in the province of Ontario. So if you travel and you take a holiday inside of Ontario, you go to a hotel or a resort or rent a cottage, keep the receipts, because per person up to $1,000, or for you and Gregory, Maria, it'd be $2,000 for the household, $2,000 tax credit, which to be again a nice amount, that again you can claim that on your taxes. It's a little incentive from the Ontario provincial government, Mr. Ford, to help tourism in Ontario and kind of help people save a little bit of money.
Is that, do you know if it works like if you take like a weekend here, weekend there, and you just accumulate your receipts as opposed
Yeah.
to having like a full week somewhere or 2 weeks?
Yeah, as far as I know, it's up to that amount, and it's gonna be like treated like similar to medical expenses, and that you can just claim and keep the details. I know we've just Charmaine just booked a stay up in Collywood in the last week of July, so we've already started to plan ahead, because it's even in lockdown, you got to plan ahead, because when we come out of lockdown, all of a sudden everyone decides that they want to start to travel, and no rooms at the inn, as they say. And there's lots of good places in Ontario that to check out and see.
The question about you said it was like an education or a training credit. How does that work one work again?
Yep. So it would be, so there's two different pieces. So for self-employed people, we can claim under personal development, we can claim lots of things like courses and other things. This is more for like one of my clients, we just did it. We were just finishing up his 2020 taxes. So he went back to school, took a part-time course at Ryerson. So generally that credit has to be not necessarily a college, or not only college or university, but it has to be more of a registered program, as opposed to something that's a bit more personal development. So it's more associated more for, again, career development. So if someone went to take their their Canadian securities course and it wasn't reimbursed by work, that would apply. Again, if you took probably like a night school course, or if you took an online course, and it is 100% on the, and it can be accumulated, so you can roll it forward for last year and this year would give you $500, and one more year $750. So it's something, knowing again that we surprise that we need to continue to learn even once we're done our formal education.
Exactly. Okay.
Yeah. All right. What were some other thoughts I was having today? I think what other topics we wanted to cover today.
Does anybody else have any questions?
Jonathan, any other questions for us today, or Memi? We don't have to be here for the full hour. We kind of hung out here a bit, so we kind of caught the first group. So it's I want to thank I don't have to cut you off yet, but I want to thank you for joining in on the first one today, bringing some questions. Thank you, Maria, for like I said, it's good to Jonathan's good for now. Appreciate that. And thank you, Maria, for jumping in to be the answer something more. I know about mortgages, but I by no means am I the more resident mortgage person. So it was nice that you were able to join in. It's also a good time right now is that for RSP season, January, February contributions up to March 1st, the first 60 days of the calendar year, those contributions can be used for the 2021 tax year. So it's also a good time to, if you need to, you can reach out to me. One of the things I do for clients or for people is kind of calculate potential tax liability and just advise clients as to how much to potentially contribute to their RSP to see what's to get the biggest bang on the tax dollar. Just remember when your RSP contributions, it's not dollar, the refund isn't dollar for dollar, the refund is dollar per your marginal tax rate. So if your marginal tax rate's 30%, for every dollar you contribute, it will result in a reduction or a refund of 30 cents. If your marginal tax rate is in the 50%, like one of my clients, we did a calculation for him, then every dollar he contributes, he's getting, it resulted in a 50-cent per dollar tax refund, which is nice. But the key with RSP contributions is managing the tax brackets. The first tax bracket goes from 0 to 48. The next one from 48 to 98. The next one from 98 to 152. So if you're in the 150, if you're over 98,000, but not quite to 152, generally what you want to do is you want to contribute to your RSPs to reduce down to as close as possible and what amount that you can afford to 98,000. You don't necessarily want to over. So say if you're earning 110, you want to contribute about 11,000. You don't necessarily want to contribute 15. The problem with the 15 is that it drops you below the $98,000 tax bracket, and you're not getting the same dollar for dollar advantage in the refund. Specifically, and especially if your income is on the upward trend, you want to save some of the RSP contribution for when you're in the higher tax brackets. So if that completely confuses you, I did my job. Thank you. That means you click on the link and you can book a time. We can chat about that, but it's pretty straightforward. But just remember that it's okay to go and get RSP stuff, tax-free savings stuff from the bank, but it's your responsibility for you to know what your limits are and how much limit you have. The banks aren't going to do that for you. They'll gladly sell you the investments, but they're not necessarily checking to say, are you over? And you definitely don't want to over contribute. You can correct it, but there are penalties if you over contribute to either your tax-free savings account specifically, but also penalties for your RSP. The nice thing is you can put money into your RSP, but you don't necessarily actually have to claim the deduction. I'm doing that with a client right now where she may put some extra money in the month of February, but we don't necessarily have to actually claim it. I can claim it on 2022's tax year too. So there's a bit more planning, not just tax preparing. So,
Well,
all right.
to be careful of any over contributions.
Yeah, it's because that's where the penalties come in quite quickly. So you don't, you could eliminate all the good stuff really quickly by not knowing. And not knowing is unfortunately, not knowing isn't really accepted by Revenue Canada as a good reason for over contributing, to say that I didn't know what my limit is. You can tell them that, they just don't accept that as a reasonable excuse or reason. So, all right, well, I'm gonna wrap it up for today. I think it's been fun. Appreciate you, Jonathan, as always, tuning in, and I know you like to see what you can learn and meet. It's nice to meet you. First time, I think. So welcome and thank you. We're back here this next Monday, but also this Friday. What day of the week are we this week? This Friday, on Friday at noon is my open networking. So you're more than welcome to join us on Friday if you're looking for clients or some other things, or just want to meet some people. We're live Friday at noon for January's open event. So hope to see you then. All right. Good to see you again, Maria. Thank you. And have a great night.